is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Are you ready for this morning, folks? We got the S&Ps up 118 points coming into the opening bell, folks. That is a high. You're talking about, what do we got going on here? Let me get my charts set, folks. And I came on the air a little bit early this morning because we got a fire alarm going on at the studios at TFNN, but our great producer, Al, man, I said, Al, just put me on live. Go get out of the building to make sure you're safe. Hopefully it's just an alarm and they'll be back. But yeah, so we're live, man. We got no producer at the helm, but Al, the man, got us hooked up as usual. And do you think we'll have enough to talk about this morning, folks, as we await that fire alarm at the studio? Hopefully. Just an alarm, just a drill that they'll be back in there as they happen. But we are in a building that's 4 or 5 stories. We got the second floor is where our production studios are. We get the 5th floor, which is where Tiger Real Estate and Construction is. So we'll get right into it, folks. S&Ps right now up 2.86% right now. How about the NASDAQ? There's a pop for you, 3.8% to the upside. We got the Dow up 755 points, 35,000 in the Dow, folks, 35,000 in the Dow. For some context, okay, the Dow is trading back to prices that it was trading at on December 21st last year, folks. The entire wipeout, gone, 35,040. Now, there's a lot of euphoria in this market. Where we go on the open, I don't imagine we're going to get to red today, but we will see what we do, man, in terms of, boy, you talk about a lot of upside. Do we go higher with the NASDAQ coming into the opening bell up 4%? Do we go higher with the Dow up 2.25%? You don't see the Dow popping 2.25% very often. You see growth stocks doing it sometime. You see the NASDAQ doing it sometime. How about the S&P? 2.85%. Crypto, SBF, he's locked up. Ponzi scheme, basically a basic Ponzi scheme is what they're charging him with. Yeah, people were sending money to Alameda. He was just basically allowing Alameda to keep that money. He made journal entries in FTX, and the money was never there. That's basically a Ponzi scheme. That's how it works. He's arrested. There'll still be a hearing at 10 o'clock today. It is interesting to see why he ended up getting arrested the night before that congressional testimony. Conspiracy theories flying left and right, as is usually the case in the year 2022. But nonetheless, it'll be interesting to see how that unfolds in terms of why. You got to imagine that a flight risk was there potentially. We'll find out, folks. But Bitcoin, it's a growth stock, man. The Bitcoin up 4.8% so far this morning. Ethereum up $75. That's 6% to the upside. Gold contract. There's a pop for you, up $35 to $18.27, folks. There's your acceleration on the CPI numbers. We're going to get into them in a moment, man. You talk about an acceleration. Gold, silver, there's a pop for you, $24.26. And you want to talk about a pop, man. How about rates, right? We got the 10-year spiking a full point and 8 ticks, man. Now, folks, I've been talking about this line. Okay, that's a weekly. This is a daily. That might be the retest of the channel line and an acceleration higher, folks. All right, we've been talking about the channel line, pretty important area. But guess what? Today is CPI. Tomorrow is the Fed. Thursday is retail sales, among many others. So we're not out of the woods yet. What's Chairman Powell going to say? Because maybe he's going to tamp down expectations tomorrow, right? Maybe the market getting a little bit ahead of itself on these numbers. He doesn't want it trading back to new highs, man. Is the Dow going to make new highs? Is that going to happen? Because you're only 1,800 points away from all-time highs in the Dow. This is not what a recession usually looks like, folks. Pretty remarkable, the Dow, the resurgence. The Dow, yeah, a solid 6,500 points almost from the lows that we made 2 months ago, folks. 6,500 points in 2 months in the Dow. And that is remarkable when you think about the move versus the NASDAQ 100. Yeah, you're still 3,200 points away from the highs, folks. That's almost a 30% pop that the NASDAQ would need to get up to that level, but nonetheless, you're up 3.8% today. We've got to jump around to some currencies, man. The dollar index, there's a move for you. 103 and change. We'll go to the 15-minute, folks. There's a drop-off. We had a 105 handle earlier. We got a 103.70 handle, just like that. We jump over to the euro, as you may expect. Euro dollar catching a spike. So much for parity. Remember when we were at 95? And what were we doing when we were at 95, folks? Pay attention to these channels. Our man, Bud Rolfs, the channel master, always thinking of him, man. And does it get any cleaner than the euro-US dollar channel, folks? You bounce around for the better part of the year. You bounce around to the lower boundary, end of September. You accelerate through the channel line on October 20th. You come back and test that channel line basically to the tick for all intensive purposes at 97. And look at the acceleration higher, which is why I brought it up when you're talking about where the 10-year was, which was the chart we were just looking at. I said, that's a pretty decisive break. Maybe that's a test of the channel line. You see what a decisive test looks like, folks. You trade from 97 to 99. This thing never looks back. We're pushing almost 107 on the euro US dollar this morning already. You jump over to the dollar yen. Dollar yen. Not even making lows, though. Interesting, right? Back to December 12th. It's really had a pullback. Quite a break out of its channel line everywhere. Man, it's going to be a wild day in the markets, folks, to say the least. And let's jump over to some of the data this morning. Let's see. We're going to break it down a couple times, all right? Where are we going? Where are we going? There we go. Okay. CPI. So, core CPI posts smallest monthly increase in more than a year. Now, there's a reason to be skeptical of this data, okay? But pay attention to what the market's doing, man. You don't see pops in the NASDAQ 100 of almost 4% instantly very often. Doesn't mean it's going to hold, but it was pretty instant, folks, and it's been chopping around at this price level since we got that number this morning. The numbers they're talking about here, okay, excluding food and energy, which is what the Fed prefers. Now, the Fed really prefers the PCE. I've been talking about those two versus the CPI, but CPI might be a close second. I love that we're going to talk to our man Kevin Hincks after the break. We're going to get his take, man. Core CPI, excluding food and energy, up 0.2% in November, 6% from a year earlier. 6%, man. 6 is a nice number. We almost got a 5 handle, right? Now, they were looking for, I believe, 0.3 and 6.1. That's pretty close, all right? That's probably within the realm of standard deviation type numbers in terms of volatility. Variance might be a better term in terms of those numbers, but nonetheless, it's nice to see the surprises and the misses under expectations versus for so long the expectation has been above estimates. The overall number increased 0.1% from the prior month and was up 7.1% from a year earlier. Still some lofty numbers, man, but energy prices help offsetting the rising food costs, food and energy, man, right? Talk about some volatility. Now, getting into the CNBC article when they have it, okay? The estimate for the headline number was 0.3% and 7.3. The estimate for the core, there it is, was 0.3 and 6.1. Quite a rise, folks. And here is when you put it on a chart, okay? I'm going to blow this up a little bit because I know it's in the background here while my producer's out at the fire alarm, and we'll see. We'll see if he's back there for the time for the break. We'll just keep going, man. We got enough to talk about today, though. We're starting to see evidence of a rollover here, folks. When you add up the headline number and you take a look at the core, okay, maybe that's a plateau. And no matter what, it's under the estimates. And that's what the market's paying attention to in a big way in terms of that number. Falling energy prices have helped keep inflation at bay. That's the headline number. And that's why you're really seeing a rollover on energy. Okay, you got to see the core number, though. So on the core number, and this is why I'm like, let's see what happens on the open, man, because on the core number, we got 0.2% versus 0.3. And we have 6 versus 6.1. Those were the estimates. That's it. We already knew the prior 11 months. They're factored into the year. So really the core rose at 0.2% versus 0.3%. That's pretty close, okay? It's not a meet and greet. It's not an increase, but nonetheless, a slight miss. Food prices up 0.5%, and we're up 10.6% from a year ago. Even with this monthly fall, the energy index is still 13% higher from where it was a year ago. Shelter. We'll talk a little bit about shelter when we get back. I hear the music playing. That means our producer is back in the studio, folks. We're going to take a quick break. We're going to come back with our man, Kevin Hincks. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. We have the S&Ps pushing 3.1% to the positive. We got the NASDAQ 100 up more than 4% right now. You have the Dow up 2.4% at a 35,000 handle on the Dow right now. Let's jump over to our man, Kevin Hincks, folks. I imagine it's going to be a fast market today, and that's the program, folks, that Kevin hosts with Tom White every trading day at noon Eastern time. Let's just jump right into it. Kevin Hincks, good morning, man.
Good morning, Tommy O'Brien. Yeah, welcome to overreaction theater that we're having today, because I think this number was a good soft number. I don't know if it's a number that should make the market do what it's doing, but I'm not the final arbiter of that, Tommy. We'll see how this market opens. And here's why I think that, Tommy. The numbers in CPI were good. I'm sure you've already said them. Up 0.1, 7.1% year over year, up 0.2 on the core, 6% on the year-over-year core. But, Tommy, here's the thing. Used cars and trucks down 2.9%. I'm sorry, used cars and trucks. New cars flat. Energy down 1.6% after being up 1.8% last month. But, Tommy, here's where it gets a little concerning, in my opinion. Food up 0.5%, both at home and away from home. Shelter up 0.6%, up 7% year-over-year. Food up 10.6%. And apparel up 0.2, up 3.6% year over year. So food, shelter, apparel, the things that touch so many people are still higher month over month. But energy, utility gas service used cars and trucks all down significantly, and that's what made this number. But, Tommy, at the end of the day, and I think Jerome Powell will reiterate this tomorrow in his comments, we're still a 7 handle on year-over-year CPI. We're still a 6 handle on core.
You laid it out well, man, and it is going to be an interesting one in 10 minutes from now, folks, to see what this market does at the open. Because I said, Kevin, I don't imagine the market's going red today, but we're already up 4%. Are we going to get a lift at the open when the NASDAQ 100's up 4.06%? Well, geez, I don't know, man. That seems a little astronomical, but being up 4% on these numbers already seems a little astronomical, man. So we'll see where we go. I had a friend texting in a group chat this morning, Kevin, and he said the internals on this report are wild. I said, man, you got to go on because there's so many internals. What are you talking about? And you just laid them out pretty well in terms of there's good stuff, there's bad stuff. The core number, like you laid it out, still at 6%. I put it up on a chart. You could make the case that we've been plateauing on that core number for a while. The headline number, you could make the case that we've been declining. You laid out maybe why, some of those energy prices playing into things. But boy, quite a day, man. We'll see where we go from here. And pretty interesting, Kevin, that the chairman, Mr. Powell, is watching this all this morning. This is my take. He might want to temper things down a little bit because you laid out the case, man. Headline, 7 handle. Core number, 6 handle. We got a long way to go. And the Dow right now, Kevin, is trading with a 35,000 handle, which is into like December 21st of last year prices, man. We're within 1,600 points of an all-time high in the Dow right now, which is pretty remarkable with those numbers laid out. Nobody knows what's going to happen on the open, Kevin, but let's jump forward to the Fed tomorrow. How do you think this shapes maybe what Chairman Powell, I guess 50 is kind of the consensus at this point, but what do you imagine he may be saying in light of this number and what the market is reacting to it this morning right now?
Yeah, I believe Jerome Powell will raise by 50 basis points, locked into what he was originally thinking, but then come out and still stay on topic that we have a long way to go, that inflation is 7% at the headline level, not 2%. We're not done. It's 6% at the core, not 2%. We're not done. The message will stay the same. I think it will acknowledge that there's been progress made. I think what this does, Tommy, it locks in 50 basis points and possibly a 25 basis. But boy, that's another whole meeting. There's a bunch of data about then, but certainly all the talk of 75 basis points will melt away nothing today.
Yeah, that's what my 500 NASDAQ 100 points in a heartbeat might do to those odds, man. Pretty remarkable, the action we're getting. We got some action in yields, of course, this morning, Kevin. We got some action in currencies. I imagine a lot of market talk's going to dominate things. You have the crypto hearings going on at 10 o'clock with SBF locked up. There's just so much going on, Kevin. What are you guys going to be talking about at 12 o'clock coming up today?
We're going to talk about Home Depot, and how they're evolving as a company away from music and into podcasts. And then we're going to look at Visa, the swipe. As we get into the holiday shopping season, how many times are you swiping, Tommy? So we'll cover those 3 today.
And I imagine you may have a segment or two on the market as they open, man. And what do you think of rates, Kevin, as this? Is it all determined kind of as we go forward? Because, I mean, the moves in the 10-year and the 30-year, absolutely dramatic, man. I got the 10-year right now up a full 1.5. Just a remarkable move. And we're talking about now pushing back to yields that, well off of those levels. I feel like this is setting up where, and this is me as a trader speaking, folks, in terms of the S&P's at 4150 right now. You just laid it out, Kevin. Seems like there's a lot of risk with built-in optimism now. When we've gotten the rallies off of 3,500 on the S&P, right, it was almost a worst-case scenario priced in. We're now at 4150. What's your general take on, market expectations and kind of risk profiles as this market is accelerating higher? We got yields lower. You got the dollar pulling back dramatically. We got the euro, I think, at like 107, man, this morning. What do you think about that setup in terms of a risk-reward analysis of where we are in this market?
Yeah, the things that will really give this market a boost this morning are a 10-year yield now trading 3.44%, and the U.S. dollar trading significantly below 104. So both of those are going to give stocks a lift. But double-edged sword on an improving economy is crude oil. And you've got crude oil now moving close to $75 a barrel after where it was. So those three things that we watch and we tell our viewers to watch on a daily basis. Two of them are pretty favorable. The one is probably going to, be something that as crude oil continues to lift. So, yeah, two of them pretty positive today to start the day, though, Tommy.
Well, I appreciate the time, man, on a morning that doesn't get much busier than this morning. We'll let you go, Kevin, to get ready for the program. We'll be watching at 12 today, and I can't wait to talk to you tomorrow already, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check it out today. If you haven't checked it out, man, we got a fast market in spades, man, with the S&Ps up 125 points, the NASDAQ up 479. We got the VIX pulling back, as you may expect. That's a drop-off, man. We were pushing 26 coming into that number. We are at 2170 in that VIX volatility index. And Kevin talked about it, man. You see the drop-off in the dollar? 103.64, and it's not stopping, folks. Okay? The dollar index, yeah, it dropped to 103.84. We're down another 20 basis points, okay? You look at the 10-year. I think the 10-year was at about 1.8 ticks when I came on the air. We're at a little bit give back, but you can see first bar, second bar, fourth bar, right? We're pushing higher, man, on this 10-year. And as I put it, that might be the one that's sticking out most, folks, in terms of the charts that I'm looking at right now. That's a decisive break, and boy, if that's a break, man, that is an indication. So keep your eye on it as we got the 10-year. Testing that channel line, breaking out of it with the decisive break, and you got it up 1.14 ticks right now. Yeah, pretty remarkable. As you said, what are we? I think we're at 3.44%, the yield on the 10-year. All right, folks, we don't get many opens like this. Don't miss it. We're going to be coming back in 3 minutes. We got the S&Ps up more than 3%. NASDAQ 100 up more than 4%. The Dow up 2.4%. As I said, Dow trading basically late December prices nearing all-time highs. If you were in the Dow, folks, you're within a week of all-time highs. We'll be right back. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. And I'm just watching this market. I'm going to go over a few things here, but we have the S&Ps up 110 points right now. You talk about an acceleration. We got the NASDAQ 100 up 440. Markets give back a few points on that open right now. I'm going to go over some data points here in terms of just cherry picking some stuff here from the Twitter machine, okay? But when you look at different aspects of the internals, right? I was talking about some of my friends out there saying that, you know, what do we have going on? We have the internals on this being wild. Okay, well, they're wild, all right, man. So this is called supercore, according to this person, okay? If you take out food and energy, but take out shelter and used vehicles, look at the numbers in terms of where they're coming, man, okay? This is the 3-month average. The internals on this, and that I think is where this market was accelerating in terms of the internals on this. When you take out some of the areas that have been most volatile and most difficult, like shelter, used vehicles, and then food and energy, okay, look at the rollover, man, that you're getting on that number. That, I think, is what the market is really paying attention to there, okay? Yeah, some of the other data points. Inflation's landing where we want it. Well, we added over 800,000 jobs in the past 3 months. You got to look at that part of it, right? This could be. I mean, this is this gentleman up here saying very definition, okay? Core inflation's landing where we want it, a soft landing. The monthly percent increase in core goods and services annualized, yeah, that's what 0.2% does, folks. Check out that chart. Now, this is taking the monthly number and annualizing it. So basically, it's just taking the month-over-month number and multiplying it times 12, okay? We got 0.2%. Tough to deny a rollover there in pretty dramatic fashion, so pay attention to that one, man. I don't know if there's going to be a let-up today, folks. We're going to see. I mean, we get a little bit of a pullback on the markets right now. All right, let's jump back to the charts for a moment. As you get the S&Ps up about 100 points, you get the NASDAQ up 400, okay? NASDAQ's up 3.37%. You get the Dow up 643. You have the gold contract right now up $37, hanging tough. We got some action in the currencies, of course. You got the 10-year hanging decisively up 1.11 ticks right now. And yeah, now what may happen is, right, you may get some selling on this pop, just because if you're in this for a short-term trade, man, and you got the NASDAQ up 3.5%, yeah, you might see a little bit of selling. But I don't know. With looking at these internals, man. Amazon, let's jump around to some of the stocks, the FANG stocks. Amazon up 5.4% so far this morning. The big dog, Apple up 3.4%. And folks, I say it all the time. It's pretty remarkable. Apple's got 16 billion shares outstanding. They're up $5 today. Apple has added $80 billion in market cap from where it was yesterday, right? You talk about moves, man. Microsoft, with some news in the London Stock Exchange yesterday, extending those gains up 3.4%. Tesla, can't even see a lift practically. Up 3.5%, but man, Tesla's got some problems. I think, what was Tesla down? 6-7% yesterday on a day where the market was actually green. Be careful of that one, man. They got some real issues, and it seems like Elon's asleep at the wheel of at least Tesla. Not sure he's asleep at the wheel of Twitter, but he looks like he is asleep at the wheel at Tesla. Let's jump around to some of the banks. Everything getting a lift this morning, folks. JP Morgan up about 1.5%, even with yields dropping down as we get this market skyrocketing higher. Bank of America up about 2.2%. Let's see how the airlines are trading. You got American up 3.3%. Delta Airlines up 1.7%. Cruise ships, any of these little tiny growth stocks, man, Carnival's up 6.6% right now. Norwegian up about 2.8% right now. Man, it is going to be a wild one across the board, folks. We're only 4 minutes in the trading day. And yeah, we do have a little bit of a pullback, okay? But let's put this thing on a short-term time frame. We'll see where we're trading at right now. And folks, even if you're talking about, whoops, that's not what we want. We want a Fibonacci chart. You take the number, you throw it on it, you talk about that number. All we've done is pull back to the 236. You're talking about on the NASDAQ, we got about 60 more points to go, where you'd hit the 382, about 12,163 in the NASDAQ. We're still up about 400 points. Dow up 572. That's a pullback for you. Let's see on the Dow on a Fibonacci basis where we're talking about. Okay, coming through that 382 right now. The Dow up 568. We were at a 35,000 handle, giving it up a little bit. Let's see how the dollar index is behaving on the open right now. Yeah, 103.80. Some serious action in the dollar index, to say the least, man. All right, I'm going to jump around to some of the other charts I had pulled up here. Friend sent me this one this morning. So this is talking about, okay, inflation drivers at annual rates and the current weights. So this is the weight of what is in inflation numbers, okay, and then the numbers that we're talking about. When you talk about the services, okay, ex-pandemic energy and rent, 30% of the core number. And look at how we're weighting the 1 month, okay? Rent ex-hotels, 8.3. Pandemic categories, except for used autos, down 20.3. Used autos down 30. Durable ex-autos, this is the percentage change annualized. You get some big numbers when you annualize it because you take a month-over-month number, you times it by 12. When you look at the pockets of this inflationary number, yeah, there is a lot in here that says that this could be the rollover. And I say could be, folks, because we're going to take some more numbers to make this happen. That's the key as well, though. Okay, for the Fed to really react, they're going to take some more numbers. There was a great question that YouTube Tigers did yesterday saying, what would happen if the Fed goes 50 basis points and then says we're going to pause? And I said, well, I don't think that's even possible right now because I think they'd go 25 no matter what, because they are on a ramp, okay? They're on a ramp just like they were trying to be on a ramp when they allowed inflation to get out of control. They're not going to just astronomically come out of the blue and say inflation's over when we got core it's 6% and the headline is 7.1. But what they are probably going to do is they're probably going to come out and say the impacts may be being felt. We're going to need more data. We're going to be data dependent. But I imagine in Chairman Powell's mind, he is excited that this news may indicate that the numbers that they're looking for could be rolling over. And this could be an indication that we are coming out of it. Now, how long does it take, though, right? The great discussion that takes place, man, is what happens when this market gets to 4% inflation and 3.5 and even 3. But let's just say 4. What happens when we get to 4% inflation? I don't know. I don't know how easy it is to get down. But I don't know if the Fed is going to be interested in cutting when we're at 4% inflation unless we have some serious indications that that thing is rolling over in dramatic fashion. Okay? Yeah, to say the least. All right, folks. Well, you know what this is setting up for? This is setting up for a great day for our man Basil Chapman on Thursday, man. He is hosting a live trading webinar, folks. Now, listen, the Tiger Dollar sale ran through yesterday. We're going to drop this down at some point today, but it's still up there right now. You can still get your Tiger Dollars for the 40% holiday bonus. I appreciate everybody who took advantage of that sale. We're sending out the Tiger mugs to all of you. We only do a sale a couple times a year. That'll be up for probably today. We'll take it down sometime during the day, folks. It really runs through yesterday. We will get it down, but if you still want them, they are available. Get your Tiger Dollars and then use them for our man Basil Chapman, folks. Live trading 48 hours from right now. Basil's going to be in there live trading. We get a Fed decision tomorrow. We get retail sales on Thursday. Anything's possible in terms of where this market goes, but I'm excited that Basil may get some decent action for a tradable market on Thursday with the volatility, because this market's going to take a while to process what's going on, man. You got to process today. Then you got to process what's going on to tomorrow with the Fed. Then you got to process retail sales, which contribute to the economic numbers driving it versus the inflation. All of that happening in the next 48 hours. So check out Basil's webinar, folks. I'll finish the conversation when we get back after the break. S&P's up by 91. NASDAQ 100 up by 379. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we got the S&Ps pulling back a bit. I mean, you got a spike originally to 41.83. The market chopped around between about 41.40 and 41.50 for the better part of 8.35. These are 5-minute bars we're looking at. Okay, so you pull back barely, about 20, 25 points, but you're still up 95 for some context here. We're 12 minutes in the trading day. NASDAQ 100, a little bit of a pullback. As I put it on the chart, you hit the 236, got slightly below that level. We're back higher by 3.5%. You got the Dow giving up some of those. So look at the difference here, right? Growth stocks maintaining the largest proportion of that gain you had pre-market, with the Dow giving up what? Dow just gave up 300 points from where you were. The Dow pulls back to 50% of the rally. You have the NASDAQ 100 barely at the 236 right now, and we have the S&Ps probably chopping around at the 382, right? And where are you going to take it? Yeah, we basically spiked to the 382 in the S&Ps. The day is young, as our man Basil Chapman says, folks. And yeah, as I was saying, folks, Basil, he's doing his webinar on Thursday. I didn't get to finish up the conversation there. It's $295 for a 5.5-hour live trading webinar. You get a month of his newsletter, folks, which is $149 value. Okay, Basil's got so many subscribers that have been with him forever. You're getting that value already for $149. So if you take that in consideration, you're really paying $146 for the 5.5-hour live trading webinar. That'll be archived. Should be a good crowd in there, man. I'm excited to be in there when I can on Thursday. And he kicks it off at 8:30 in the morning, folks, which is right when retail sales come into that number. So check out Basil, man. Sign up. And I'm looking forward to that one with our man Basil Chapman. He'll be up next, folks, with the opening call, as always. And if you haven't checked out the opening call, folks, check it out anyway. He does a great job, Basil, man, with his newsletter. You get a bunch of free webinars as a result of signing up for the opening call. Subscriber webinars immediately. It's an outstanding service, and Basil is a great educator, folks. It's one thing to be a great trader. It's another thing to be able to convey that knowledge in the way Basil does to his subscribers and to his webinar attendees. So I said enough there for our man Basil Chapman. And market getting a second lift right now with the NASDAQ up 440, S&P's back over 100, and Dow up by 587. All right, let's see what else we got going on right now in this market as we jump around. That was the CPI. We're going to talk a little Tesla. So Tesla trades at 30 times forward earnings. Its lowest level, the stock could drop to 150 before coming attractive. These are just hot takes from everybody out there, folks, okay? But don't think when a stock gets decimated that somehow you're finding value, okay? Tesla, price to earnings ratio, okay, is almost back to the S&P 500, right? I mean, look at where it is now. Yeah, you were at 200 plus times. Man, some of these numbers, right? Pay attention to multiples, man, okay? Because it is remarkable, the multiples out there that some of these companies got to. A lot of bright minds on Wall Street were saying, I don't know when, because the market can be irrational for longer than anybody can withstand sometimes, okay? But when you were getting these types of forward earnings, right? NVIDIA had some bonkers forward earnings going on as well. I forget what they were, but NVIDIA's forward earnings were pretty bonkers at some of the spikes as well. But boy, remember what the charts of some of these equities look like, because they can go lower. Bloomberg reported that Tesla plans to suspend output. This is Friday in stages at its Shanghai electric factory. They're big in China, man, and they're going to be facing some heat in China when you look at what they're going to be doing, okay? They have a problem. They have more of a problem than just Elon being distracted with Twitter. That's the key part here, right? That's getting a lot of attention. Tesla has fundamental problems going on right now that are deeper than what is going on with just Elon's attention. And that's why he should be paying a little bit more attention in terms of what is going to Tesla. Now, we jump to the China headline. There it is. We saw this happen here, folks, okay? You can't just turn the key, tell everybody to reopen, and that's how it goes. People are going to get sick in China. They're going to have to get some natural immunity. That is going to shut down businesses when they can't work. We saw it happen here. That's what explained away transitory inflation. Those were the factors that influenced so many analysts, including the Federal Reserve Chairman and the board, to say that they thought it was transitory because you had people calling out. You had trucks that couldn't drive because roads they were sick, the truckers, right? Whether the businesses, the plants were sick. Well, you're seeing it happen, man. China's COVID wave is rippling through the nation's financial industry. Currency volumes falling as traders call in sick and banks activating backup plans to keep operations running smoothly. You're going to see this play out across the board, man. And you're seeing it play out right now. Half of the currency traders at one bank in Beijing were off sick yesterday. The process of executing and confirming trades slowed considerably. Now, this is the finance market where that's playing out, but I imagine it's playing out everywhere, man. So you already saw Apple come out, right, with the revisions of the iPhones. It might get worse, man. Maybe Apple was forward-leading what's going on here, but maybe they weren't. And maybe there's more pain to come in terms of what's going on. The government's overall tally of infections has plunged after mass testing was ended, right? Yeah, they're not testing anymore. So they're not having the numbers. You got long lines outside hospitals, people struggling to find medicine. In Shanghai, which dealt with a wave of infections and grueling 2-month lockdown earlier this year, the situation looks to be a little bit more contained, but we know how this goes, folks, okay? Hospitals in the city are posting tips on social media telling people how to cope with an infection, urging them not to come unless they develop severe symptoms. This is what was happening in the U.S., in Europe, etc. And you're going to see it play out, and you're already seeing it play out. In terms of half people, trading desks, calling out, trading volume lowing. Yeah, so take that for what it's worth, but that's going to play an impact. It's going to be a wild card going forward, and I don't imagine that letting up anytime soon, to say the least, as this market holds up pretty well right now. Yeah, taking a look at the yield curve right now, we get the 10-year at 3.44. I mean, on a 1-year, 2-year, 6-month basis, still pretty lofty numbers, man. I had talked about it before, folks. If you have any money, cash, just sitting around, make sure you're getting paid for it, man. Open an Ally checking account. I think they're up there if you need to. Go get a CD. Open a bank that's actually rewarding you for deposits. Because in so many of the big banks, you're still getting pennies on the dollar in terms of your return, where a 1-month treasury, 3.7, man. A 1-month CD, think it's pushing like 4. A 3-month CD is 4.1, 4.2, something like that. Okay, so there's still dramatic returns on some of those short-term yields, but boy, you go out, they're dropping, and they're dropping pretty dramatically right now. And the next conversation is going to be about the actual economy versus about inflation. The moment we get inflation under control, folks, it's going to be what kind of damage have we done to this economy? We fast forward to the Fed. Fed's unemployment estimates to rise as recession warnings pick up. This is what I'm talking about, okay? The central bank is publishing a new outlook for the labor market Wednesday. We're going to go right from this volatility into that volatility. Higher projected peak of interest rates spurs more pessimism. Well, guess what? This article was written at 5 in the morning. A lot has changed since 5 in the morning in the markets, folks. Economists polled by Bloomberg expect Fed officials to project unemployment rising to 4.6% by the end of next year. That would compare with their median projection of 4.4 in September. And that would mean 1.5 million more people out of work than now. That's going to matter, man. Okay? You're going to have almost a couple million people out of work. Yes, 4.6 is a pretty healthy unemployment number, okay? But when you talk about the impact on the economy, you talk about 1.5 million people losing their jobs, it's going to matter. Now, looking at the projections, projected unemployment rate for Q4 of 2022, Q4 of 2023 is in pink, and Q4 of 2024 is in yellow. And you can see that they're merging. This is the last estimate in September. They're emerging at about 4.4. Well, you're going to see that number rise, and this is what a lot of analysts are talking about, okay, in terms of you're going to see that number rise. We're going to see it hit.
TFNN
We'll be
has
right back,
just
folks.
launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. And I got this up on a 1-minute chart to see the volatility, man. There's your 930 on the S&Ps. We pull back a bit, but just like that, we're up 24 points from where we were at about 937 this morning. We're going to see a two-way market, man. NASDAQ 100 nearing almost 4% again. You see the acceleration. We get down to about 12,183. Just like that, we're 100 points higher, pushing the pre-market highs in the NASDAQ 100. Dow up 622 right now. We jump over to the currencies. Dollar index, yeah, right back to a 103.73 handle, man. Tough to see how this reverses right now with the internals. There's a lot of volatility to come tomorrow, but yeah, 50 is locked in, and there is not enough data for them to pause, folks, okay? That's not what the chairman's going to say, but I think the market is probably ecstatic that, guess what, 50 is locked in. If the numbers continue like this, they're probably going to go to 25 on the next one, and if the numbers continue, maybe that is the ammunition to pause. Can't pause yet. You got to go 25 next. But maybe that's it. And maybe that's where the market's trying to get ahead of itself. We've talked to our man Kevin Hincks many times. If you can forward look in the market 6 months, folks, that's when things are going to happen, right? So if you can imagine that in 6 months, this market's really getting ahead of itself, because that's where, guess what? Inflation's under control. Now we're dealing with unemployment that's rising to 4.6%. We have inflation under control. Now this is an if. I need more data for that to happen, but that is what you're seeing play out, folks. And the pockets of this number, remember, the Fed is not as concerned. Okay, they're concerned about inflation, but their interest rates cannot impact food and energy the way it can other aspects of the economy. So they're not going to get caught up in food and energy when raising interest rates will not have that impact. That's why they like the core number, and they like core PCE most importantly. But that's why they like that core number. And, man, we'll see where it plays out. S&P's up 2.7%. Folks, I appreciate you starting your trading day with me on a busy one. And remember, Basil Chapman, man, check out his live trading webinar, folks. Basil's excited. I'm excited for him. It happens on Thursday. And stay tuned, because we got our man Basil Chapman coming up next with the opening call. Thanks so much, folks. Have a great day. We'll see you tomorrow.